Alright, I don't have a lot of time. Alright, hope everyone's having a great day. I don't have a lot of time, so I'm just going to briefly try and review everything. So, biggest thing to start with is 60-minute chart, trade range. So, point being, bull trend, breakout, start of the channel arguably. Well, if we come down to here, the bulls want a double bottom, so arguably we have a bear trend, double top, doesn't really matter, bear trend, breakout, pullback, double top. I think the bigger thing is we're trying to test down here, and we're going to try and form a double bottom, but it's trading range, so you pick. Here's the biggest thing to think about. Here's the past few days. Here is Monday. Notice here, strong sell-off, strong rally, but lower high. Strong sell-off, strong rally, lower high. Strong sell-off, strong rally, lower high. Notice this. Think about the math at this moment. Well, maybe it's not exact, but it's close enough. This goes down to 54 even if you do it exact. So you had your stop one tick above, takes you to 54 even, which is the low of this day. So think about it. If you sell here, stop up here, and go for twice the risk, it's a sound trade. Arguably we're making lower highs and lower lows, so any rally will be sold. And you can make the argument, well, this went above a major lower high. Well, it really didn't, in my opinion. I think this is just a larger two-legged pullback. Here's why. We have a lower high, but not a lower low. Very often, when you get a lower high and not a new low, it sometimes forms a more complicated pullback, if you will. So, let me make myself clear on that. Lower high, higher low. Lower high, lower low. Well, go back to this. Not a major lower high. So, but notice this. Could not get above this lower high. And then we sold off. So arguably we have a spike down, lower high, spike down, lower high, spike down. This was just sideways. So just remember, if we keep channeling down, let's say tomorrow, I doubt it'll happen, but let's say we go all the way up to here. Well, I'm going to say the same thing until here. I'll just say it right now. Here is the sell-off. So here's 50%, here's 67%. Now we'll start with this. 50%, 67%. So look at this. Notice how before you rally all the way up to here at the top of the prior leg, it's 50% pullback. Well, above here, really more up here, it makes sense for bears to short. They'll short somewhere in this area, more up here, stop up here, going for twice the risk. Well, and they'll do it every time. They sold up here, stop up here, betting on a new low. They sell up here, stop up here, betting on a new low. Sell up here, stop up here, betting on a new low. So if we keep channeling down, at some point we could get a bear breakout, and it'll be a more obvious bear trend. However, just zoom out. I mean, it's a trading range. So looking at today, the biggest thing bar one was kind of a good hint on the day. For what? Let me think for a second. Okay, sorry, I had to kind of collect my thoughts. So here's the thing to think about. You always, especially on the start of the day, you have to be leery. Look at this bar, 835, and look at bar 2. Good stop entry, bad stop entry. Do you really think that a doji with a one tick bull body and like a 3-point tail is really going to lead to the high to the low of the day? Well, probably not. So, here's kind of my initial thoughts on this. Just going to see a few things real quick. One second, I know I'm jumping all over the place, but I'm trying to prove a point. So, well, anyways, I guess my point is, it's very difficult to sell this high and scale in higher because you don't know how high we'll go. We may go all the way up here. However, here's the thing to think about. And let me start and get to here, and then I'll explain it further. So, bar 2, great bull bar, probably trap scaling bears who are not going to hold forever. Good follow through, probably always in long, stop below here. We're probably going for some sort of measure move up. Here, decent sell signal, failed breakout. You can call it a wedge, you can call it double top here. Doesn't really matter. It'll fail. It's not that it will fail. It's more likely to fail because it's the first part of the day with a pullback bar, if you will. First time we've gone below a prior low, so it's probably going to fail. Here, arguably, you can call it a wedge, first, second, third, but ask yourself, strong second leg, strong third leg, probably going to get a second leg up. Second off, I would not sell here because you haven't had a trend line break. So remember, here, no trend line break. Exhaustion bar. So it's okay to short. Why is this a good short? Well, you have a wedge. First push, pull back, second push, pull back, third push. We may get down to here. We may test back to the 1 high even. So think about the math. The math is fantastic for me to short below here, stop 1 tick above, betting on down here. I will achieve well more than twice my initial risk. Well, that's what happened. The odds are we would get down here, and then we got well more than that. So, and that kind of starts with this bad stop entry. Usually a good swing that's going to lead to the higher low of the day and a decent movement. In this case, a decent rally or decent sell-off is usually going to be a decent stop entry. So I say that it's going to look good. In other words, here, good bear signal bar, possible exhaustion, good short. Not a great buy. It led to a great buy, but it's probably going to fail. So at some point, bulls are trying hard. You can see a lot of bulls. They had a very brief opportunity to get out break even, and we started turning down. Here's where the scaling bulls started giving up, more of them, and then we just kind of vacuumed down. Well, this was very parabolic, number one. Number two, I put the measured move here, by the way, because up here it never reached it, and this could be an outlier. Second, because 4 even, price came within a tick of this measured move, so it leads me to think more computers use this. And I'm sure you could make some arguments. Here's the bodies of this spike from here to here, led to the exact same place. So, there's a lot of reasons you say here to the middle of these bars. Point being, very strong sell-off here. I would definitely get out of longs. It just because you have a huge open profit if you sold all the way up here. I don't know, I could see the reasoning getting out here. It's tough. You know, the odds, we made a new low in the day, but first bull bar in like, 7-8 bars, so first break of the trend line's probably going to fail. Here's what's interesting. So again, let me pull out a 50% measurement and a 67% measurement. Look here. You have to be concerned when you see this, couple bull bars, couple bear bars, couple bull bars, bear bars. You have to be concerned. It should be, your radar, if you will, kind of flashing, telling you this is trading range price action. Where's the good bear signal bars? Where's the pullback to the moving average? Look here. Why did we go sideways for like 18 bars, whatever, 10 bars, 2 good bull bars? You have to think though. Climax, consecutive sell climaxes. It's gone down like 30 points since the high. You expect 10 bars and 2 legs. Well, is this 2 legs? Is this second leg up? Probably not. Pretty strong. So you have to really wonder, you have big up, big down, sideways. We've been going sideways for a while. You really have to wonder. You've got to be suspicious. And with all the trading range price action, be suspicious about the open of the day. We didn't get there, but we tried to. So if you're in the room, you heard Al talk about the math of buying above here, betting on the open of the day. Well, there's decent math. I think the problem, which kind of limited order market, and then we broke to the upside. However, a couple problems. The biggest, most important problem with this breakout is this. We've been sideways for, just so you can have an exact number, we've been sideways for 32 bars. This sell-off was 25 bars. Excuse me one moment. So anyways, I think 32 bars. I believe that was the right number. Let me just double check again. 31 bars, 25 bars. So you got to be suspicious. We've gone sideways for like 30 bars. Sideways, this trend was 25 bars. Well, remember, the further something gets to the left, the less important it becomes. So very similar to there's a good day. We had one recently. Yeah, okay. Well, you can make this argument. Trading up, and we're starting to go sideways, so this becomes less important. There's an even better one now. This was it, right here. So we created a double bottom, you can call this a rally, 2-legged pullback, and broke to the upside, sideways for 20 bars up to this point. Well, with each bar that gets added, the probability becomes less. So just like here, yeah, there might be on a larger time frame. This is a major trend reversal, 15-minute chart. Yeah, it is. It's just a 3-legged pullback, 2-legged pullback to the moving average. However, 5-minute chart, very sideways. At some point, you just have to the probability becomes very close to 50-50. So at that point, you have to think about, if you're taking a swing in here, you have to think about the risk reward. So what makes the most sense? Well, trading range price action through the past couple of days, buying anywhere with the stop down here betting on an open of the day, it's good math. It's well over twice the risk, especially 1 times the risk. Selling, there's just no, if I sell down here, I may, I can hope for a new low of the day, but that's really not that's probably the best I can hope for. Here's twice the risk, takes you exactly to the low of the day, but following 2 bull bars, so the math favored. If you're in the room, that's why I said the math favored a test of the open of the day. We had this kind of messed up. We had a rally and then a sell-off, so we're probably going to test up to the open. When, I don't know. So let's look at something real quick. Very often, I'm kind of curious. I think this is always a reasonable thing to do. So here's the low of the day. Trader who's quick enough could buy somewhere down here. And let's say they, sorry about that. So institutions know, bulls aren't stupid. They know the bears are going to take profits down here. So if a bull is quick enough to buy, and let's say, so anyways, let's say they did this. Kind of extreme, but you buy somewhere in here, stop down here, and bet on the target up here. So, in other words, a regression to the mean, which would be the open of the day. I think the math's really good. So, I think it'll be an interesting trade, especially if the trader can buy close to here, scale in somewhere down here, stop down here. So, who knows? It'll be interesting to see. Alright, hope everyone has a great evening. Well, actually, real quick, I just want to always in. I think you buy. I think you have to get out below this bar, or try to be out below here. Maybe on this close for sure. Down here, there's just too much risk of more down. It's a wedge top. You expect to test down here, possibly measure to move down, taking you to something like this. Whoops. I don't know why TradeStation does that. Something like that. Point being, there's just not a great stop entry, not really great. Good breakouts, but not consecutively. Good breakout, bad follow through, good breakout, bad follow through, good breakout, close in the middle, strong breakout, no follow through. It's suspicious. Really, you've got to wonder, we broke above yesterday's. Sorry, I'm kind of out of breath. We broke above yesterday's high, turned down, broke above it again, and we're turning down. So, we could easily make a new low and then test up. However, one thing to understand and note is this was not high probability. This and this, reasonable. Usually when you get big up and big down, it goes sideways. So we make, we make a new high of the day up here during this bar and this bar, and we test down, make a new low of the day sideways, and we just kind of float in the middle. Sort of similar to this, big up, big down. But here, you got to think the Bulls could have made 30 points selling below this bar and getting out down here. Do you really, they've made a ton of profit. So there's no incentive to sell quickly. They know it's exhausted. They know it was a gift, and they know it was probably vacuum. So, as good as these bars were, there were tails on the bottom. Here's a real kind of important thing to notice. You know, in hindsight, this looks strong. Well, breakout, not, you know, where's the breakout and then the break, you know, why isn't there a breakout bar and another bar that's like this big? You know, small breakouts after this breakout, doji, big breakout, but it didn't close on its low. You know, you're getting the best breakouts at the low of the day, sideways, breaking out, but getting smaller, and then bigger. You know, this should have been up here. I hope that makes sense. So in other words, a good trend, you get something like this. You know, you get a strong breakout early. You get a breakout bars early. You know, you get something like this early on, and then we kind of channel down and then rally. You know, arguably just kind of fun thing to think about. Spike, we attempted. You know, this was the first attempt to get a new high. We failed. Second attempt, so it's arguably large double bottom. So you expect a, you know, once we test up, break to the upside, you expect a measure move up. Maybe here, you know, maybe here. You know, more. I mean, the more obvious thing is this because we exceeded both those. So, anyways, all right, that's all I've got. Hope everyone has a great evening.